I believe we're live here. Good afternoon, everybody. Today is Friday, December 10th, 2010. Let's take a look at this market here. We had bullish price action, obviously. So I guess we have good audio, which is rare when I use the camera, actually. But here we are looking at a weekly chart of the SPY, and we can see that after last week's big bounce off that rising 10-week or 50-day moving average, we did see continuation to the upside. The volume was lighter this week, but again, what pays is not volume but price action, and we've seen actually the volume trail off here the last 3 days after Tuesday's bigger reversal, and that's something to be aware of, but it's not something that you definitely want to, sell short the market on or anything foolish like that, because obviously it's price action that continues to move higher, and we had that Tuesday and Wednesday morning really bounce really from that 5-day moving average, and that level held. So obviously, today what we were looking at was this area right in. I'm sorry, that was yesterday. We were looking right at about that 124 area, and after the initial gap up, the market did kind of consolidate a little bit in here, battled that VWAP, and then the buyers really took control. And when we take a look at this advanced decline line, you can see here that we had basically 2-to-1 advancers to decliners today. So it was strong participation as far as the average stock was up. 2-to-1 up versus down, and the price action continues to move higher. So we're above a rising 10, 20, 50-day moving average. Obviously, on the shorter term time frame, we have that 5-day moving average, which held as support this week. So next week, we want to see that these levels continue to hold. First up would be this 124 level. Below that, really right in here at about 123.30, and the bigger level that should act as support. Well, actually, I guess that is that bigger level. Let's go back to the daily time frame. Was this level here that people were calling a double top? Really at about 123. The definition, or the way a double top works, is we get a rally to point A. The market finds some resistance. It pulls back to what's known as, or what becomes point B, and then if it finds resistance in that general area, a lot of times you will, see maybe a move where point C would be higher, but it's not until we break a trend line and point B that you can call this a double top. So at this point, maybe in 3 weeks we would have been able to call it a double top, and then what we would be looking at is the height of that pattern measured from the point where it breaks down would be, in fact, what would become the target of a double top. So just because a market finds resistance in one area, and I talk about this a lot, this wasn't a double top, it didn't break down through point B. In an uptrend, you have people who really don't understand technical analysis very well calling just about every time we pause at one particular area, they call it a double top, when in fact it's just a little bit of a pause maybe, and we suck in some new short sellers and that sort of thing. But looking at the weekly time frame, where we are, where we have the potential to go, here's where we are. We'll just draw a horizontal line right across that. And this morning in the blog post, I was talking about the lows from early 2008 as a potential first upside target, and that level really, let me delete that and change this back. That level is right in here at about 126. We could take a close look and see what those are, but that's 126.07 right there. This low was 126 even. So looks like this market should be headed for at least 126. It doesn't mean that that will become an area of resistance. It's a potential level where sellers might be encountered, and if it can push up through there, then looks like north of 130 is where the SPY goes. As for the NASDAQ, we've been talking about this level from 2007, which is 5507 or 5508, something like that. And it's, it just feels and seems magnetized to that level. We're getting maybe a little bit choppy up here, but we do still have a pattern of higher highs and higher lows. And our job is to focus on trending stock action and to be looking for the opportunities where we can find low risk entries. And a low risk entry, could occur in a stock like you could get a low risk entry in Lululemon, today or yesterday, even after this big gap higher. You look at the price action, look for these little consolidations. So, for instance, today when it touched that 2-day volume weighted average price on Lululemon. Now, I didn't trade that. I am looking hindsight here, but as it crossed back above volume weighted average price, you could have bought with a stop near 64.50. And I don't mean to say, well, you could have done this or you could have done that, because that just sounds like any fool could say that. But this is the strategy that I like to use for stocks such as Lululemon. When they are, show this continued strength and a gap higher, they pull back, they get back above that volume weighted average price, and to buy them then. The point is, you can look at a weekly chart or a monthly chart of Lululemon and say, wow, that's up too much, it's extended or something like that. And we've been looking at these highs for a while in Lululemon, very similar to DEC. You can look at DEC and say it's up too much, it's extended, and that sort of thing. But this stock continues to torment the short sellers here as it really continues to act technically strong. I mean, it's not even breaking below a rising 10-day moving average. And actually, when you look at it, the 5-day moving average never even turned lower in here. So you want to be looking for the low risk trades within the direction of the primary trend, and be aware of when and if the market breaks below support, then you want to become more defensive. You want to be also careful not to place too much emphasis on the market overall when we're in a primary uptrend and get a short-term pullback, but to focus the management of your risk on the individual stocks. That's really what remains key. But in the NASDAQ, next week this will be an important level, I believe, near about 53.60, 53.50, let's just call it. Breaking below that, then maybe the market gets a little bit more defensive, but there's no reason to look for that, really, other than, you can look at it and say, well, the market's up too much or whatever, but it just doesn't make sense. The Russell 2000 continues to lead the way, up another 1.25% today. We look at this weekly time frame, and we're basically getting right up towards those 79.80 level, and I mean, if we can push past that, why wouldn't 85 be obtainable? Is the way I look at it. The path of least resistance is higher. We have this most recent consolidation, which took price through time. We had the higher low and a breakout, and it continued to rally. The semiconductors have been up a whole bunch, as we know, and this group, you could argue, is extended, but it's not pulling back. It was had another positive week this week. Here's the highs we saw this week. It's getting into that area. So we had seen, in other words, this the high this week was in fact a level that we've had our eye on from back here in 2007, and the next level above that would be those highs from 2007, middle of 2008. Now, if you wanted to sell short, based on that would be up to you, but I would wait for even, besides maybe a day trade below a volume weighted average price for the day, maybe, but I would wait for that 5-day moving average to turn lower, and then we get a pattern of lower highs and lower lows before I would, think that it makes any reasonable sense to sell short something as strong as the semiconductors. Financials, I think I said it on Wednesday. I know I said it to subscribers yesterday that really the way to trade these financials is not really on this daily chart. We trapped the longs here, then we trapped the shorts. Now we're back up, and the buyers are back in control. We have all these moving averages rising. The daily chart's really kind of a mess, and it comes within the context of let's just take a look here. Let me change that scaling of this weekly chart that, if we can make it past here, maybe the financials now do take the lead and push us up towards $17. But where we've been able to make a little bit more sense of these financials has actually been, let's go 35 days, has been this 30-minute time frame. We had that pattern of lower highs and lower lows. It broke below and found resistance at that declining 5-day moving average, and that pattern of lower highs and lower lows continued. So then the market started turning higher, broke that 1460 level. I said I didn't trust it to the long side, and I'd rather miss opportunity and focus on a different area of the market that makes a little bit more sense to me. But had you bought long in there, we continue to see this pattern. And yesterday I said this is the most recent relative higher low right now for these financials if you're trading from an intermediate term standpoint. That and maybe now you can even raise your stop up underneath this morning's low. Either way, the financials, you've got to be impressed with this recovery. The volatility here of the last month and a half is kind of probably shaking out a lot of people on the long and short side of this market, but you got to be impressed with the resilience of it and the ability for it to get back above and close at highs not seen since May when it gapped down over here. The gold market, I said I would talk about that. We've seen some big candle reversals in this 135 to 137, 138 area, and so we're getting some aggressive selling in here. We're not in a downtrend. We have these moving averages crossing back and forth as we've noted before, but we still have that rising 50-day moving average, and this is probably the bigger level that's important. So I think gold, you have to just look at it as probably it's correcting here a little bit, and it's likely to be more of a correction through time than it is through a sharp price reversal, because again, you back it up a time frame to that weekly chart, and it's just in a big uptrend here. So let's take a look. Let me see, was there anything else that I was going to talk about here on my list? Right now, I guess there's not. So what I want to do is take a look at the stocks that you guys have requested, and let's take a look in here, see where we are. Let me figure this out. Bionic Trades wants me to take a look at Sandisk. SNDK says, Sandisk, can you please cover Sandisk? It's at the breakout level. Well, Sandisk has held up very nicely here at this rising 10-day moving average, and it did so on a nice decrease in volume. So we saw volume expanding in the direction of the price movement. The market digested those gains, basically, sideways here. They didn't really pull back price-wise. And did so on diminished volume, meaning that the sellers weren't rushing in to push the stock lower. Here we see on the daily time frame that it's up to at least the June highs. Let's back it up a little bit to the weekly time frame, and we can see that June high is in fact the high for the year. And I'm sure there's people calling it a big cup and handle as well. To me, a cup and handle over a 3-year period maybe isn't quite as valid, but you can see that it's at an important level. This was prior support here, just under $50 a share in 2007, and that's where the big decline, when that $50 level failed to hold, that's when the decline really took hold in this market. Look at the direction of the 40-week moving average. When that 40-week moving average flattened out and we had those higher highs and higher lows, nice stage 2 uptrend, a little bit of consolidation here, but breaking past 50, I'm sure is going to get a lot of attention. The question is, can you make a good purchase on a break past there? Well, I think that today was the better day to buy rather than waiting on a push past 50. But these big stocks, when they get going, they can just continue to rally. So I think the focus in Sandisk should be that it's right at that key level, and you want to look at this thing and manage risk right now, and say maybe buy it on Monday above today's highs with a stop even just below what was today's volume weighted average price near 49.40, or maybe you give it a little bit of room down to the mid-morning lows near 49.60. But how you manage risk and how much, or that wasn't 49.60, 49.20 rather. How you manage risk and how much risk you decide to take. You might be looking at this and going, wow, that's an insanely close stop. Maybe you want to put it below this recent higher low here where we've had some support near the $46 level. To me, it's I don't think you need to take that much risk, but it was nice to see a little shakeout below that rising 10-day moving average, and then the buyers step back in. So Sandisk does look like it's on its way to continuation, probably up towards this next level near about $55 a share. So I like the way Sandisk looks, and just you manage the risk in it, and don't do anything stupid like try to sell short a breakout. It looks like a good idea. Let's see where. are we? Sandisk. Thank you, Henkel Garcia. How about Going Mackay wants me to take a look at GII. GII, is that right, or is that GIII? Looks like GIII. That's good because I don't like GII. GIII up $1.12 today. Let's take a look at the volume in here. I think Going Mackay throws me some thinly traded ones once in a while, but let's see. We've got about 319,000 shares average daily volume, so it's a little thinly traded. And again, ask yourself the question when you get involved. You want a good risk reward. You want to say, how much potential do I have relative to what the perceived risk is here? You do that by asking two questions. Where has it come from? Meaning, where is there a decent level of support where I can set a stop without taking too much risk? And is there enough potential upside to justify that risk? Well, we've just come from basically, let's just call it 27.5 to $35 a share, uninterrupted in the past 6 sessions. Doesn't mean it can't continue to move higher here, but we've seen 6.5 points. What would that be percentage-wise? Close to 20%, uninterrupted, uncorrected, unchecked in just 6 short days. So that makes me think that we're a little bit late to the party, and it's thinly traded. It's similar to buying after one of these big candles. What typically happens? It maybe grinds higher a little bit, but I think you missed it. I think it's too late. To me, it's foolish to buy after this big of a move. Again, it doesn't mean it can't continue to move higher here, but what's most likely after a 25 or 20% rally over the course of the last 4 days? So I guess it had a little bit of a shakeout here down in the rising 5-day moving average, but very difficult to trust. Even in the last 3 days, we've seen a low of 28.5 to 35. So Going Mackay, I would say that you want to wait for this thing to pull back, correct. It's going to take a few days to do that. If you really need to be involved in this stock, I would say your stop goes maybe underneath this 34.5, 34.25 level. But to me, the potential upside does not favor what looks like bigger risks in here, because the stock has expended a lot of energy getting to where it is at this point. Lefto wants me to take a look at CVH or AN. So I'll take a look at CVH. I've been talking about CVH. I think I mentioned it Monday or Wednesday when I was how the hell did that happen? On Wednesday when I was on the show, I was talking about this one, how I like the way it's setting up with these higher lows here. Very nice that to see that the buyers are getting more aggressive price wise. It keeps hammering away just below this resistance level, and I think this was 26.88. I believe is this high, 26.82. This high was 26.82. Today we made it through that 26.82. So I think it should have been, realistically, it should have been bought there. Let's take a look though at where's the potential upside for this stock. How much reward is there? Well, here we're taking a look at the weekly chart and looking back. I've just kind of reframed it so we can get a better perspective here. But here's where we are. We've been banging away at this level. The stock seems like it wants to go, and the next level of potential resistance might be up near about 28 to even $30 a share. So when we look at that daily chart, it's doing what it's supposed to. When we look at the 10-minute time frame, I've been talking about and telling subscribers that the bigger break point was above that 82 cent level from the daily time frame, was above 26.82. But I've been talking about how a cheat buy would probably make sense in this stock above $26.60. So today what we saw in here on the 2-minute time frame was we saw the stock gapped up and ran. It pulled back, and then you look at this and say it got back above that volume weighted average price. It looks like it's on its way. It closed below the VWAP for today, but I think especially on Monday, I think this goes to the top of the list on Monday, because if you didn't purchase the stock today, then if this is just a pullback that refreshes the stock right here, and this is what I'm always looking for. I don't want to buy after one of these moves. I want to buy after, not as it pulls back, but as it starts to make that pattern of higher highs and higher lows. So over here, it goes on watch, but it failed. It held the rising 5-day moving average. It went sideways. You want to buy the higher high. It made that higher high today. So if you missed it, now you look at that correction and say, okay, it's in a good position here. Now if the stock continues to move higher, and let's say we buy it back above, I would say even this level, 2670. We had a little resistance there this morning. That's where it kind of broke down. So I would say on Monday, you could buy this stock with above 2670 with a stop just below this pullback low, 2650. So you could get involved in this trend with a stop here. This is our higher low. Now if you were waiting for a higher high, you could buy it above that 88-cent level. I think you can get it above that 70 cents with a stop at 2650, and then looking at, risking here, what did I just say, 20 cents or so for maybe a couple points of upside. A 1 to 10, 1 part risk, 10 point or 10 part potential upside. Now, risk reward is always garbage in, garbage out. It's only as good as your analysis. You can say, well, isn't that stop too tight? I usually risk 5%. Well, 5% is foolish. Why would you want to risk $1.30 in this stock down to, what would that be, $25.30? There's nothing really significant, or maybe there is at $25.30. If you're maybe below this higher low, it doesn't make sense to me, because even if you were going to use a more lenient stop, I think that this is the definition of trend here. It breaks the higher high. Your stop should go underneath this level right here, and that's where we have that rising 20-day moving average as well. So for a swing trader above, Friday's high or today's high, or cheat and buy it through 2670 once momentum redevelops in there and the buyers take back control. But again, that's where I tell people all the time. We look at ideas like this, and I say, now you have to make the trade your own. Trade it according to your own risk reward and what you're comfortable with in terms of how much risk you're willing to take, whether you can sit there and watch it. I mean, today, for instance, I've been trading the puts in MOTR. I've been looking for a pullback to the 20-day moving average. I've been looking at this thing the last couple days as it finds resistance at that declining 5-day moving average. I had puts last Friday, covered most of them down here, repurchased some I think on Wednesday, and then it finally broke today. And fortunately I was sitting there, because it broke, and these are 2-minute candles, 2, 4, 6, 10 minutes. It broke down within 10 minutes. I covered half of my puts when the stock was down here at my target. I covered the rest of the puts up here, just thinking, holy shit, you have to just be sitting right on top of this thing in order to profit before the money, bled out of this position. Anyway, so my point was, that's the way I traded it. And by sitting there, being in front of it, I was in a position to take advantage. If you're not sitting in front of the computer and have the opportunity to watch every little blip, then you know what, your stop probably should go below here, just below 26, maybe 25.95. That's still not a whole lot of risk for a stock that might be making it up towards 28 to even $30 a share when we look at that weekly time frame and where's the potential for resistance. So let's see, the next question was from Positive Psych, which is, how about a look at NTAP? NetApp. Good looking daily chart here. We've got had a little bit of consolidation. I know a lot of people were getting excited about it right here as it broke that near-term resistance, and that was probably a good place to be a buyer. So you look at this and say, it broke this near-term little resistance level, and maybe I didn't, maybe it needed to break this level is where it seems to have found a little resistance. But this is the area is what I meant to draw. Okay, so you look at this and you say, it's above a rising 5-day moving average. It found support at that rising 5-day moving average. Maybe you should have been involved here, or there, or maybe on the next push up through this level. But NTAP, we don't want to look back and say, here's where you should have bought or whatever. What can we do with this thing now? Well, we've got now, looking at a 10-minute time frame, we do have a lower high today than we saw yesterday. Not a big deal. And we do have a lower low than we saw on Thursday as well. We're right at that 5-day moving average. The 5-day moving average is flattened out. I think NTAP probably needs to clear up through $55 a share We want to see it hold and make a higher low. We don't want to see this pattern continue and the stock reverse. It looks a little similar, I guess, to maybe Baidu, which someone asked me about on Wednesday, and we've been kind of tracking in here a little bit because Baidu, I thought, looked good a week and a half or 2 weeks ago. I was saying maybe a back above 110, 110.50. Well, it didn't hold those gains, so you have to move to the sidelines. Now, Baidu hasn't gotten back up above that 5-day moving average, and I think it probably needs to clear 110 again, because now the daily time frame is just looking kind of neutral here. There's no reason to be involved. But back to NTAP, we look at this stock, and the daily chart looks bullish. The weekly chart, it's in an uptrend. But do we want to buy it right here, right now? I think we want to see the stock recover a little bit, maybe rally back up towards 55, pull back and then a little, make a higher low near this, this resistance becoming support, and then push higher. I think it's a good one to keep on the radar. I don't think it's a great one to buy Monday morning, but I like the way it's setting up. How about if I could take a look at HSFT for Kev 946? HSFT. I think this is an IPO. It is. Now here's another one. Okay, now 190,000 shares is the average daily volume since this thing's come public. I'm sorry, that's the 20-day moving average of volume. And it came public back in July. Looks like down here, about $10 a share or so. It took off real nicely, and it found support at the rising 20-day moving average. It pulled back down to the 50. It's tested the 50. It's tested the 50 again. It looks like the stock tried to break out. It failed to hold on to that breakout. These IPOs can be great trades when they first get going, but when they start breaking down, you have to kind of pay attention to them. And it seems as though it's popped back into this range. The breakout failed. If we look at a 65-minute time, well, let's look at a 130-minute time frame and tighten this up. What we can do is we can say, since the last push higher right over in here, and let's just go back, let's make that a few more days and tighten it up. So basically, since this push higher here, okay, since the beginning of September, since that level, what I want to do is I want to say, what's the volume weighted average price? Okay, so I look at this, and you can see that line is drawing there. And we are right at that volume weighted average price. I mean, that's kind of strange. We'll draw that again. So since this level, you can see I'll start the line up here, and you can see I have no control of where that line is actually being drawn. That's drawing a volume weighted average price from whatever point I choose. Now, I happen to choose this for no reason other than that's when the last push higher began. We're right at the volume weighted average price. We're right at that 50-day moving average. I think it's a failed breakout. And I think that people are going to be looking to lock in profits on this. It's a thinly traded stock. That makes it dangerous. It only traded 204,000 shares today. Maybe you're going to get a bounce off this 10-day moving average, but I would not be looking. I would think, best case bounce you're going to get is maybe up towards the declining 5-day moving average, maybe up near 28.5, 29. But this thing looks like a whole bunch of danger to me. I would stay away from HSFT. How about a look at, we got a lot of them here. People are asking for more than one. I'm just not going to have time for that. Let's take a look. What time do we have? 4:30 already. 2:30 local. I'm going to do just a couple more of these. We're not going to get to them all. Sal, I get them for you every single week, so I'm going to pass you over this time. Sorry. Give somebody else an opportunity. I don't recognize the name Mark 115000, so how about SWC? Let's take a look at SWC. Stillwater Mining. Well, I think just when it comes to mining in general, let's just take a look at the mining index, GDX. If you look at the action in gold and silver, they're coming in pretty strong. And you look at Stillwater Mining, which I believe is more silver related, but it came in real hard, and then it gapped lower. It looks like, it's still above a rising 50-day moving average, so I'd generally say innocent until proven guilty. they might have done, it looks like with that big volume, I don't know the news on this, but it looks like they probably announced a secondary offering. They did a secondary offering down here, and now the stock needs to absorb that. On a weekly chart, it got up to these 2008 highs and backed off almost to the penny, which is pretty strange. Not strange, but strange to those people who don't look at charts and understand this stuff. But I think it's kind of more neutral than anything. I don't see any compelling reason to be long, and I definitely wouldn't short it with the strength in this group and that sort of thing. So I would say there's we have to let it absorb whatever happened here on this gap lower, which again I suspect would looks like a secondary offering. And these secondary offerings has been just murdering stocks lately. Look what happened to Gurn the other day. Jaron looked like it was maybe getting ready to go. They announced a secondary and the stock just got smushed. This thing was maybe getting ready to break out and they killed it. That's going to need to recover. So anyways, let's look at what do we have? Boston Scientific for Observe the Tape. And this is going to be the last one. BSX. We've got a weekly chart up, so let's start with that. We broke that down trend line. We broke this pattern of lower highs and lower lows and made this higher. So we broke that lower high, and that resistance at that lower high has been acting as support. So that looks good to me. Back it up here. We've got a rising 10, 20, 50-day moving average. It's been holding this 200-day moving average as well. And we had a golden cross right there. The 50-day moving average went through the 200. And I'm kidding about being excited about that. So anyways, the daily time frame, let's take a look at what we have here. Okay, so this is the level we've just broken past, a little bit of resistance there. And we can see that was an important level it got past today. It's been prior support, which was resistance here a few times this year. So now it looks like it's probably headed up for the next level of importance, which occurs near this area where the stock gapped down from, and that's up at about $7.60. So maybe we've got about 50 cents as our initial upside target, and then the next level above that we would be looking for maybe $8. So if it can get through that 760 level, then $8 would be the next potential upside objective. Looking at it, so we're looking at maybe, what would that be, 50 cents to maybe, best case, 90 cents of upside, 50 to 90 cents of upside. Look at that 10-minute chart and say, here's where it broke the resistance today. Okay, so that was pretty obvious level. And you could say there on the 10-minute time frame we had this cup and handle, which might be a little more obvious if we back it up to the 30-minute. And actually not, because this is what I was calling a cup and handle. But when we back it up, we can see that's been a longer term important level. So I think if you can see this stock pull back towards 7 maybe. So let's say this was today. I'm just going to kind of redraw it in. This is today. And here's where we closed. I'd like to see something like this on Monday, where it kind of comes down, boom, and then pushes out like that. So I would be looking to buy right about here. So maybe there's a slight pullback, and then pushes back up, and we buy it there with a stop real close by. Because for 50 cents of upside, you don't want to be setting your stop down here at $6.75 a share. Risking 35 cents for 50 cents of upside doesn't make sense. So you have to kind of custom tailor it and say, well, is it worth taking 35 cents risk? To me, it's not. So I think in Boston Scientific, you look for a slight pullback, and then you hop aboard this thing, expecting that it's likely to reach 760. If it doesn't encounter big resistance there, it probably heads up towards $8 a share. So that's going to do it for today. Again, December 10th. Have a good weekend. I will talk to you guys again on Wednesday. Thanks.